Welcome back. Well, the SGX Nifty has cut its losses down about 132 points now. At one point, it was down well over 200 points. Prakash Diwan is now joining us to make sense of some stocks. Prakash, hi, good morning. Let's start with Prakash, the city gas stocks, because they fell on Friday in anticipation of this price hike. But do you think more is likely?
Good morning, Anuj. So before I answer your question, congratulations on this new role expansion. And I can tell you, as managing editor of Awaz and Bazaar, those are two other channels that I also participate in. I'm looking forward to teaming up even in a more intense way with you around doing this role. So congratulations.
Thank you, Prakash. It's like, as you said, role expansion. So I think well put. Thanks a lot.
Yeah, sure. And so this gas stocks that you mentioned about, interestingly, the last entire week was absolutely abuzz with this whole price hike issues that couldn't get resolved till the last date, which was the 30th September deadline. But my sense is that it has to be realistic. I mean, you can't keep on looking at a mathematical price hike potential increase, which is 100% plus or whatever, and burden the economy, especially critical sectors which depend on it. So I'm sure there's going to be a solution. The opportunity that you get in terms of this dip, because of this confusion or uncertainty that prevails, is actually very good to enter into these stocks which have a very good long-term secular future. I mean, they have capacities, they have been augmenting capacities at incrementally one of the lowest costs possible, especially Mahanagar gas and all. I don't see any reason why gas as a fuel will get out of fashion, and the consumption patterns are very encouraging. It's just the supply side constraints that are causing a little bit of this disruptive move. But I think it's an opportunity for long-term investors to buy into this old economy stocks and plug into a very, very steady growth rate. But you'll need patience. You'll need patience because this would take some time for the volatility to ease out.
Okay. Prakash, good morning. What about Eicher Motors? Banging numbers coming through from Royal Enfield this time. I think people predicted it, right? Because the Hunter had done so well. But for the stock, it's up 40% this year already. Do you see more upsides?
Good morning, Sonia. So, it's a classic example of how expectations change so dramatically. When the Hunter was launched, I remember people kept on talking about saying it's going to dilute the premium positioning of the brand, and this is not the same as the Bullet, and it's taken a segment. It's in fact added to a new segment which the Royal Enfield Bullet was not able to address. So this is more affordable. This is more new age. It's something which stands out as unique. So I think all of that product mix gaps that they had, and I keep on explaining this in auto companies, the product mix is the most critical element for you to chart future growth, and a lot of your margins will come from whatever is sold more profitably with the least friction. In this case, I think they need to launch a couple of more models if they really want to continue this stupendous growth. And there are some options in their stable. The Cafe Racer is also waiting in the wings to do that. So I think some of these gap filling efforts will definitely pay off. It could still have some steam, is my view, though it's moved up. But it's a catch-up it played, right? I mean, it caught up with the other two-wheeler guys, which had already been doing steadily well. So it's not really in that sense something which is out of place. But I think there's still another 20-25% upside for the next 6 months that's still left for Eicher Motors to travel.
Prakash, hi, good morning. Banks and the bank Nifty has been looking extremely strong, probably the strongest of the lot, right? Went through a bit of a correction phase and came back very strongly as part of that rally on Friday. What's looking best? We've got a couple of, actually, the first of the business updates, pre-quarterlies are starting to come through, which show pretty decent numbers.
Yeah, so I'm sure we'll hear about it in more detail when the Federal Bank management comes on board. But it's very interesting that finally that thesis is playing out as quickly or as timely as was anticipated. 3 months back, 4 months back, when everybody anticipated that a lot of these provisions that were made on balance sheets from the NPAs that have been accumulated in the past will probably start coming back as right backs, and then that's something which is going to significantly add to the profitability, and that's exactly what's happening. One, the credit growth is the other metric which has been very positive and very surprisingly positive, Prashant. I didn't expect some of the smaller banks to also participate in this credit expansion that's happening. But the capex that's happening is much more judicious, is much more well thought of, and it's of a scale that's manageable by if you see the cumulative balance sheet strength of banks. I mean, they have never been in a stronger situation from a growth and a balance sheet perspective. So that combination continues to offer very good metrics. But you know what? You will see the best growth happen in the larger ones for sure. So the likes of SBI, though they've run up quite a bit, Axis, ICICI, I think will continue to do well. A surprise package there could be the special situation between HDFC Limited and HDFC Bank. We've not discussed much of that, but as it comes close to fruition, I think that will also be a very, very promising special situation opportunity of buying into HDFC Limited and riding the salience of the bank along with that. So, but yeah, to answer your question specifically, banking continues to offer, even in spite of this run-up that we see, which keeps on happening sporadically, there's still a long, long way to go for the re-rating to be healthily consolidated at some level.
Okay, I do have